All right, welcome back to Two Stupid Guys Trade Stocks. I'm Denny,
I'm Dylan.
and today we're going to introduce a one of my first value pick of the series. Let's get right to it here. So, all right. So today we're going to talk about position that I actually opened this week. I opened about 500 shares in this stock on Monday. It's actually traded pretty much sideways since then. So I think it's still a tremendous value in terms of positioning opening right now. So this is actually one of their products. They make office furniture. They also kind of make furniture for hotels and are looking to expand a little bit in terms of like an e-commerce channel, but right now it's predominantly office furniture. Company's been around for quite a while. It's actually still manufactured and headquartered here in the United States. Founded in Chicago in 1857. They originally manufactured pianos, and
What?
yeah, exactly.
Really?
That's where they got their kind of trade set in terms of making furniture. They ultimately were acquired by a company out of Jasper, Indiana. And that made TV cabinets back in the day when TVs came in like a wooden cabinet.
That's so they've had a couple pivots.
Well, they were acquired by them.
Oh, okay.
Yeah, exactly. The company that acquired them ended up keeping their original name, the Kimball International. They also even had an electronic division, which was spun off back in 2006, I believe. But the company I'm referring to today is ticker symbol KBAL. It's Kimball International. So they have four primary business segments. One is like the workplace segment, which is, as you can see, down about 24%. They also have sell furniture for healthcare business, which is down about 4% on a quarterly year-over-year basis. And then the hospitality segment is the segment that's down the most. If you look at you're seeing 56% down on a year-over-year basis for the fourth quarter. Their fourth quarter of 2020, their fiscal second quarter of 2021, actually. But relatively, the sales are down, but profitability has been barely impacted by this entire thing. The other thing I really want to stop.
So the stock price actually lost like 50% in March, but their numbers don't really reflect that.
Yeah, exactly. This is really a recovery play, and I think it's a solid recovery play in terms of they still have quite a room to run up to achieve pre-pandemic levels, and their business has not been impacted quite to the degree that the stock price would suggest. They're also able to use this opportunity of the pandemic there to broaden their business. They closed on an acquisition of a Poppin, which was more of a low-cost office furniture company that also has like a bit of an e-business play in the fourth quarter of 2020, and we'll be interested to see what that adds to their business going forward. They don't anticipate profitability from that unit, I believe, until 2023, but still, it should help their infrastructure with the e-business should help broaden Kimball International's reach as a whole, I believe. So here's the stock chart that Dylan was referring to. As you can see, that they were beaten down by the pandemic last year in 2020, rather appropriately. However, their stock price has traded sideways, whereas many other industries have recovered. From cruise lines to malls. You've seen a pretty broad recovery in stock prices. You have yet to see it in Kimball International. So that's why I think it's a relatively attractive value play here. Even more so, the entirety of calendar year 2020, Kimball International reported one quarterly loss, so they've been able to maintain their dividend throughout. That's what these Ds you see on the chart here are. So it has a 3% dividend yield and still continues to this day. The quarterly loss they reported was related to acquisition, kind of write-downs with that Poppin acquisition there.
Wow, okay. I would have thought it would have been a lot more than that because office furniture,
Yeah, exactly. They've been able to cut costs, and I believe the profitability will return to the pre-pandemic levels before sales fully recover. So once sales fully recover, they should actually be a more profitable company than they were pre-pandemic.
Right.
Additionally, they're kind of really shored up by a solid balance sheet. They have only taken on about $40 million in debt related to the Poppin acquisition. Prior to that, the final quarter of 2020, that they actually had no debt on their balance sheet. And if you look at their current asset to current liability ratio, which is kind of an indicator of the underlying financial stability of the company, you'll see that they could meet their requirements without too much difficulty. So, pretty rock solid balance sheet.
Yeah, it's pretty impressive.
Yeah, exactly. Completely limits your downside potential. Then also the 3% dividend yield gives you, a little bit of income while you wait for my investment thesis to carry out. You can also use the dividend reinvestment program to continue increasing your position there if you choose to do so, which is something I did. In terms of where I think it's going, I think it'll return to pre-pandemic price, about $18 per share, sometime in the next 6 to 12 months. I'm thinking second half of calendar year 2021, which will be during their fiscal year 2022, which represents a roughly 50% upside potential from here. And that is me kind of completely ignoring the Poppin acquisition and any future growth that they are able to drive through e-business. As you've seen, the trends throughout the kind of workplace environment have really accelerated work from home sort of business, and the competitors have been able to capitalize that. Kimball International really has not at this point, but I think they will be able to a degree with the acquisition there of Poppin and the integration of this e-business.
That actually looks pretty conservative for the 18. I think they could probably get to 20.
Yeah, I've definitely seen price projections out there as high as like 23 or so with like a 2-year time horizon, which I think is reasonable. But kind of shorter term, about 1 year, I expect them to get back to about $18 a share. So kind of in summary, limited downside risk, secondary to that solid balance sheet. So it's hard for the company to go too much lower when they're still well capitalized and actually broadly profitable. Get paid to wait with that 3% dividend yield. I think it's a solid entry point right now, kind of bouncing off the 100-day low. The market overreacted to their recent quarterly loss, and I think it's got about 50% or so potential for profit in the next year. And if you're a bit of a fanboy of following the smart money, so to speak. Yeah, exactly. So this Kimball International currently represents about a little under 2% of Michael Burry's portfolio. If you don't know who Michael Burry is, he's the guy played by Christian Bale in the movie The Big Short. He's a interesting character, to say the least. It was actually, in terms of percentage change, it was the largest percentage change from Michael Burry's Q3 13F filing, which is the most recent one we have. We should be getting an update to that in the next month or so. So we'll see if that is indeed still the case. But
do we lag like 6 months on that information?
Yeah, it's a fair chunk of time. I'd have to look at exactly how long. I think that was reported in November, I want to say. So it's been a few months.
Okay. Yeah,
And
that guy's pretty awesome.
Yeah, exactly. And I just want to say, thank you guys for watching, and by all means, give us a like if you enjoyed the comment and the content, and then comment down below if there's anything you'd like to see from us in terms of things we can improve upon. Dylan and I are still very much learning this whole YouTube thing. And as I said, I opened a position in Kimball International this week, and hopefully we'll see how this plays out over the next 12 months or 12 to 24 months or so.
So we're gonna start recording all of his value picks into a chart, so you can see the entry points and where it's at, so you can compare it directly to the SPY. That way we can kind of look at the performance of the value picks. If you watched his portfolio video, he's pretty solid at this. So,
Yeah, well, thank you, Ken, sir. Yeah, it takes a lot of time. I would say that this is broken down into only 10 slides, but there was at least 8 hours or so of my research that went into putting this thing together. I really kind of believe the basic premise that the most important thing in investing is not losing your capital, and so I try to really put in the effort to make sure that anything I do invest in is very solid and I have limited downside risk. So that's
Right.
that's basically what I'm at it from.
I mean, 8 hours in research in 10 minutes. That's pretty solid. So it's pretty good.
All right. Well, thank you guys for tuning in. Join us next when Dylan's going to show us some of his swing trade ideas. Far more downside risk, but the upside risk is a lot bigger too.
No,
so.
not with the stop losses. That's going to be for this upcoming week.
All right. Perfect. Thank you, guys.